Bottom fishing in stock market, everyone love it but always miss it. Hi everyone, I'm Angie and I love to share stock trading strategy. Today, I would like to share the MACD operating strategy that I always use when bottom fishing. MACD biggest characteristic is stable but it lacks sensitivity. If you use MACD alone for bottom fishing, it is difficult to buy at a low and safe price. After watching this video, careful bottom fishing will become much easier. We suggest that you like, subscribe, turn on the notification bell and repeatedly study. Today's video will mainly cover two topics: golden cross underwater, result in multiple rebounds. Each successive wave is lower than the previous one in a weak market and every rise is a rebound. Now we use secret institutional parameters of 5, 34, 5 for the following parameters, which allows the buying point for the golden cross to be relatively early. Both of the current examples occur with the golden cross above the zero axis. If the golden cross is below the zero axis, can it still be traded? Of course it can. Let's take another example, Nvidia. From November 2, 2022 to February 14, 2023, it is evident from the chart that the stock has fallen below the 60-day moving average line. After less than 2 weeks, the stock price rebounded back above the 60-day moving average line. The MACD used institutional parameters and exhibited a golden cross. Typically, a golden cross underwater leads to multiple rebounds. However, after this golden cross, the stock continued to rise. Why did this happen? Because we used the 60-day moving average, which was still upward, and the direction did not change. The price only temporarily fluctuated below the upward moving average line. Even though the golden cross was below the zero axis, it was not far away. This golden cross is close to the zero axis and coincides with the stock price returning above the moving average line. This is a buying point for a deep correction, like a dragonfly touching the water. Have you learned it? In practical application, when the stock price falls and touch or break below the 60-day moving average line, but the direction of the moving average line remains upward, and the stock price can rebound back above the moving average line, accompanied by the appearance of a MACD golden cross near the zero axis. This is classic dragonfly touching the water strategy. The stop loss point of this strategy is to use the 60-day moving average as a stop loss. In other words, if the stock price quickly closes below the 60-day moving average after buying, then immediately set a stop loss. Otherwise, hold the stock until it reaches the target profit level. The dragonfly touching the water strategy is a very practical one. In summary, we use the 60-day moving average combined with the institutional parameters of the MACD. If combined with trading volume, the success rate will be higher. That is what we call a success rate that may even approach 100%. So how to use it? First, in the several callbacks in the chart, we can find the first callback, the second callback, and the third callback. The first callback means that the stock price did not touch the 60-day moving average. The second callback means that it touched the 60-day moving average. The third callback means that it broke through the moving average and then returned above it. So the second and third callbacks in the chart are just minor correction. At this point, we need to focus on the coordination of trading volume. Here we need to talk about a classic term called continuous falling ladder volume. What is continuous falling ladder volume? It means that the stock price has fallen continuously for at least 4 days and the trading volume below it has also been continuously increasing for at least 4 days, forming a ladder-shaped volume pattern. That there should be no interruption in between. Therefore, after the first callback in the chart, a continuous falling ladder volume appears at the final bottom position after 4 days of continuous decline. The price then stopped falling and stabilized after a bullish candlestick. So if we buy based on the golden cross at this point, the success rate will be relatively high. Let's take a look at the third position. It also fell continuously and broke through the 60-day moving average. At the same time, the trading volume below it increased continuously for 4 days, forming a continuous falling ladder volume pattern. After the continuous falling ladder volume pattern appear, the stock price rise and the trading volume decrease. Aggressive trader and consider taking action near this position. So we can see the continuous falling ladder volume here, and we also see that the MACD quickly appear a golden cross near the zero axis. At this point, some investors began to take action. Of course, it can be more conservative to wait until the stock price stable above the 60-day moving average before buying or opening a position, both of which can enjoy the subsequent significant increase. Here is all the sharing in this video. If you think that this video can help you improve your trading plan, please like this video, subscribe this channel. Next video, we will guide you more tips how to use MACD in profit taking point. Bye bye.